If you want to learn on how to trade the market using top-down analysis in the market, then watch this video to the end, because in today's video I'll be showing you guys how to actually use this top-down analysis and make crazy figures from the market by just using it to analyze where the market is coming from and where the market is going to get to. Then from there the market now start rising towards the upside or towards the downside, depending on the movement of the market at that particular period of time. So stick to the end and get to learn this once and for all, because I'll be showing you the 3 major time frames to use when you want to trade this top-down analysis and the 3 lower time frames to use, and how to join the both together so you can be able to make money by trading these top-down analysis in the market, guys. If you're meeting me for the first time, my name is Philip Joshua, and on this channel I'll be teaching a lot of things about the forex market, starting from the beginners level to the advanced level. I just dropped a playlist for people that want to learn, start from the beginners level to the advanced level. It is in my video description. You can just go into the video description and get to tap on it. Then from there you get to learn on how to trade the forex market for free, guys. It's about 20 something videos there, and if you watch those videos very well, there's no way you're not going to make money from trading the market. So let's continue with the video. If you're new to the channel, don't forget to do what? Hit that subscribe button, hit the like button, and don't forget to tell your friends about the channel so they can also get to watch and get to become better in terms of trading in the market, guys. And if you haven't joined the Telegram community, don't forget to do what? Join the Telegram community and get to trade with us, so that from there we can also get to trade together and get to make money from the market, guys. So let's get straight into the video. Let me get to show you on how top-down analysis works in the market, start from the diagram to the chart, and from there you can also get to learn it and get to become a better trader when trading the top-down analysis in the market. If you have watched a lot of video and you're still confused on how this works, this is the perfect time for you to get to learn this and get to become better in terms of your trading, guys. So let's go straight into the chart right now, guys. Let's go. Alright guys, so when it comes to top-down analysis in the market, we have 2 ways of trading this top-down analysis, which is starting from the major time frames down to the lower time frames. And when it comes to the major time frames in the market, we have time frames like W1 time frame in the market, which is this weekly time frame here. We have our D1 time frame in the market also, and we have our H4 time frame in the market. So these are the 3 major time frames that we use when it comes to we getting to trade the top-down analysis from the higher time frame. And when it comes to the lower time frame, I'm sure you can see this also. You can see this place whereby we have our H1 time frame in the market, we have 30 minutes time frame, and we have M15 time frame in the market. So these 3 time frames together is what we use in order to trade our top-down analysis on the minor time frames. But to get the perfect top-down analysis in the market, you have to start from the weekly time frame, which is the place whereby you get your major structure of the market for that week. Then you get to know what you're going to do, if you're going to follow the trend, and get to know where the trend is going to. Then from there you get to make money, because the trend is the money of the market, and the moment you start trading against the trend, just know you're trying to lose money in the market. And this is where a lot of people get to do mistake, because they don't even get to this time frame at all. A lot of top-down analysis trader gets to follow up with D1 time frame in the market, and this is totally wrong, because they don't even know what the market is saying for that week, and that's one of the reasons why they get to enter their D1 time frame in the market and get to lose money. But if you start from the weekly time frame, get to D1 time frame, there's no way you're not going to find the structure of the market and get to know where exactly the market is going to for that week. And after you get in the structure of the market on the D1 time frame, which is the time frame where you bring it closer to your lower time frames, which is the minor time frames in the market, then after that you take it back to your H4 time frame in the market, which is another time frame where you get to confirm exactly where the market is coming back to. Then after confirming that this is the last place that the market is expected to come around, if I thought the market wants to go in a very strong bullish move or bearish move, regardless to what the market is doing at that point, after getting this, then you have found out your structure in the market, you know where exactly you should be expecting the market to come around. Then from there you go back to your minor structures in the market. So on these minor structures right now, you're trying to find out where the trend of the market is coming from. So when you know the trend of the market now, you check your H1 time frame in the market, get to confirm the activity that's occurring in the market already, what the chart is doing, what the candlesticks or the line chart, whatever you're using, is doing at the market at that point. Then from there you get back to your M30 time frame in the market. After confirming on M30 time frame in the market also, you get to confirm your last confirmation on M15, because after M30 is M15. Then if you do these 3 things together, you'll be able to find out where the trend of the market is going to. Because right now you know the structure of the market already, you know where the market is coming from, you know where the market is expected to come around. Then from there the market now changes direction and move towards the upside or the downside, regardless of where the market is going to. Then from there you go back to your M15, which is the last time frame that I've told you guys. After getting back to your M15 time frame in the market, you get to spot out your entry points, then wait for the market to come around that place, then you get to enter and get to make money from those spots that are spot out in the market. So that's how these things works in the market, but you have to know how to calculate it very well, which is one of the reasons why I have to take you to the chart right now with a real life example, so you can get to understand how I do this every day and now I've been able to make money from the market and get to lose little amount of money whenever I want to get into the market. And I'm also sure that a lot of you will be thinking that I don't use M5 or M1 for entries in the market. Those ones are for sniper entries in the market. If you want to get into the market to lose very little amount of money, you can get to use it and enter first before every other trader tries to enter in the market. So that one is for the sniper traders, but the best time frame to use for entries in the market is M15 time frame in the market. So let's get into the chart. Let me get to show you on how this actually works so you can get to use it also and get to make money from the market, guys. Let's go.
Alright guys, so this is a fresh market, and in this market now we're trying to make sure we get to know where it's trying to open in the market. We're also trying to make sure we get our top-down analysis in the market right now. So this is the process of getting it. First of all, I told you go to your weekly time frame in the market, which is the first time frame that you get to check out before you go to your daily, then H4 for your major structures in the market. So we're gonna do it practical now. I'm gonna bring out my horizontal line, which is what I get to use whenever I get to trade top-down analysis in the market. So this horizontal line will be out. Let's find our support zone in this market. So in this market now, all you can see in this place is that the market is trying to come down towards the downside, but you don't know exactly where the market is trying to come to. So let me explain what happened in this place now. The market came around this place, got a retest around this side, came back, still got another retest, pushed towards the upside, because the first movement here wasn't able to take this structure away. So the market had to come and get another retest in order to get more momentum that will push the market towards the upside. So after the market has tried taking this part away and it wasn't possible, the more momentum that the market got pushed the market towards the upside, and finally the market has been able to break this structure around this side. So since the market has been able to break it right now, we expect the market to come back, get another retest around this side, which is the last area whereby the market didn't get to get a retest around. Then from there the market now start rising again, because if the market gets a retest around this place and start rising towards the upside, they know that this movement is not as strong, because this place is still in the market and the market hasn't gotten any retest around this side. So we're going to bring our horizontal line to that place now, because that is the place where we expect the market to get a retest around, and that place becomes our support zone on the weekly time frame. But this is not going to conclude the movement, because we still have to drag it back to our D1 time frame, then H4 time frame we get to conclude on our major time frame in the market, just like we have explained in the diagram already. So the next move now is to go to our D1 time frame in the market, which is our daily time frame in the market. So on our daily time frame right now, you can see that the market is dropping, but where exactly is this market going to drop to? That's the question right now, and that's one of the things that you have to mark out wherever you want to trade in the market. So around this side, you can see those retests in this place. This is a sign that this place has been tested already, so we don't expect the market to come around that place again. And around this side, the market hasn't tested that place. So right now, you can see what the market did. At first, the market came around this place, got a retest with this pin bar candle in this place, and started rising towards the upside. So right now, the market has taken this structure away, which is the structure that was supposed to be taken out, because around this place, the market came, got a support, got a resistance around this side, couldn't break this former resistance, came and got another support again, and from there the market came and got a support around this side. So when the market got a support around this side, the market rose towards the upside, even after the decline in this place, which is the rejection around this side, that was trying to tell us that the market is not going to go towards the upside. But due to the strong movement that was formed in this place, which is this strong support area in this place, the market came and started rising towards the upside again. So right now the market has successfully broken this structure, and this structure is a higher time frame structure, so we expect the higher time frame movement to push the market towards the upside. So the market has broken this structure, not just this structure, and also broken this structure. So right now, two things are going to happen in the market, which is one, the market should either get to take away the whole of this structure away and get a retest around this side. Then from this side now, we will now push towards the upside, if at all the bullish movement wants to continue. So we have to make sure we mark out the place so that the market should come around. Then from there, we expect the market to rise towards the upside. So around this place now, I'll be checking out to know if where I place the horizontal line is actually accurate. So I'll be dragging it down a little bit to this part. This is where the horizontal line is supposed to be. So as the market is in this place now, we expect the market to rise from there toward the upside. But this is not our final movement when it comes to us getting the major structure of the market in the market. So we're still going to go back to our H4 time frame in the market, which is the next one that we're going to use to find out this movement. So right now that we're expecting the market to still drop back to that place due to the structure of the market, if you look very well, you can see that the market is trying to go bullish for a very long time, and things are trying to operate in the market. So we expect these reversals to come back, and from there the market now start rising. So go back to our H4 time frame right now. and we try to know if this place where we're expecting the market to come around, it's going to actually push the market toward the upside. So on this H4 time frame now, let's check out, let's get to know if this is going to work out. Around this place you can see a lot of movements in the market already, and we expect the market to do what, take this structure away, which is the same structure we are seeing on our D1 time frame, on our weekly time frame. We expect the market to take it away, and from there we get that retest. So right now in this market, we expect the market to do what, get a retest around this place. Then from this place now, the market now start rising towards the upside after taking away the all of these structures in this place. We expect all of this place to be the structure that will push the market towards the upside. So right now we're going to drag this back to the downside a little bit, because this place is where the market is expected to come around due to the formation that I'm seeing right now. So since I know this kind of formation and I've been kind of trading it for some time now, if the market gets around this zone, that's the all of this place now, I can get into the market and get an entry, and this place is going to be my stop loss area in the market. So right now the major structure that we're looking for has been found in the market, and what we're going to do now is know where the market is coming from. Then from there we can be able to take trades and get a follow up with the movement of the market, which is the trend of this market now, which is this bearish move. And from there we get to make money while waiting for the major structure in the market. So on this place now, you can see that the market has been very bearish. You can see that the market came, took this structure away, got to get a new confirmation around this side, then the market continued falling towards the downside. So right now this is a confirmed area in the market, and what we're gonna do now is find out areas whereby the market didn't get a retest around this movement. Yeah, from there we'll follow up with the movement and gonna make money, guys. So in this place now, since you have gotten that retest around the side, we're gonna place our horizontal line around this place. Around this place is like a structure, and the market is not expected to come around there and get to break it. Why? Because we have this bearish engulfing candle around this place, and this place is a pin bar, so we're going to place it below this place, expecting the market to come around that place. But we will go to our H1 time frame, M30 and M15 to confirm these and get to know where we should be expecting the market to come around. Then from there we get that retest and push the market toward the downside. So right now we're going to drag this a little bit toward the downside, which is this place right now. Then the next move is our H1 time frame in the market, which is for the minor structures in the market. So now that I've gotten the major structures, what we're looking for is the minor structures that will use and follow the trend and get us to make money from the market. So look at this place now. You can see that the whole of that place, we got a lot of crazy rejections, and these rejections are not going to expect the market to come back around that place again. These are very strong rejections. Whenever we sit in the market, as someone that's been watching the chart for a very long time, you get to know that things doesn't get to work out on that place again. So I'm going to drag this horizontal line to this part whereby we got this last movement around this rejection. So since that we got in that place already and the market is behaving as if it's going to drop, there's a structure in this market also, which is this structure right now. If I thought this market gets to take this structure away, then we expect something new to happen. So for now, let me get to place another horizontal line around that place, telling us that structure has to be taken away in order for us to get a new structure while still following the movement of the market, which is the trend of the market, using the minor time frames in the market too. So right now we're going to drag our screen back to this place and get to check if that has happened already. Okay, now the market has broken that place already. We're going to delete this, so we're going to expect the market to come back now, get a retest around somewhere. But let's get to check this on our M30 and M15 and get to know the exact spot that we expect the market to come and get this retest around. So now our M30 time frame right now, we're trying to make sure we get the trend of the market and get a follow up with it. So right now the market has come around this place, but this movement doesn't look that strong in terms of we're expecting the market to go down very well with this kind of movement. So we're going to drag this horizontal line back to this place where we have this fair value gap candle in this place, and this engulfing candle is a very strong candle in the market. So let's see what happened around that place. Right now I'm going to go back to our M15 time frame in the market, which is the last time frame that we get to confirm our entry zone or entry point in the market, guys. So right now on our M30, let me get to drag it to that place where we mark out, which is this place right now. Then let me go back to our M15, which is our last time frame when it comes to us trying to get what the market is trying to do. On our M15 time frame now, you can see, and the market is actually dropping already, crazily dropping, and we want to actually get into the market, but we don't actually know where we're going to get into now. But a lot of rejections around this side telling us that the market is not going to drop on the downside. But due to the fact that that structure has been taken away, the market is still expected to come and get a retest around this side. Then from there we get to drop more in the market till we get to that place where we're expecting the market to buy from. Then from there we get to buy and get us to make money in the market. So we're going to drag this up a little bit, we expect the market to break the whole of that area, and that is our entry point now on our minor time frame. So on this place now, if the market gets around this side, I will get to enter and start clear positions and still gonna make money. But if the market doesn't get around that place, then this movement is not as valid as I want it to be like. I'll just have to wait for the market to get back to our major point where we get to buy from there and get us to make money in the market, guys. So now this is like a plan A in the market, trying to follow up with what the market is doing, which is the trend of the market, and the trend is always the money in the market. And the other part is the plan B, which is the one we have on our H4 time frame right now, expecting the market to come back to this place. So the distance between this place and this place can actually make you some kind of money if you get to follow up with the movement of the market, guys. So that's how to trade using top-down analysis in the market. First of all, find out where the market is expected to come around and get to follow up with the trend and get to make money, guys. So it's very simple. Use your horizontal line. Don't get to use a lot of tools in the market. Get to understand the movement of the market, areas whereby the market have tested and areas whereby the market hasn't tested already. Then from there you get to join all of them together and get to make money. So it's a very simple concept in the market, and I hope you get to understand it. But if you don't get to understand it, get to watch as many times as possible and get to learn more about the market, guys. So that's all for today's video. Let's get back to the video. Let me go to conclude, guys.
So that's all you need to know about top-down analysis in the market. Do it to do what? Hit that subscribe button, hit the like button, and don't forget to tell friends about this trading channel, guys, so that from there you can also learn about the market and get become better and more profitable when it comes to trading in the market, guys. Let's go and see you in my next video, guys.